I trade for about 1 hour each day and I can make anywhere between $5,000 to $10,000 per day. But that was not always the case. Years ago when I first started trading, I was feeling lost, confused, frustrated, and I was losing money in the process. It wasn't until I built a simple trading strategy where I could risk $20 to $50, learn the process, and then scale it to actually become a profitable trader using this simple system. Most traders, when they're starting out, don't realize that you can actually start with $100 or less. You just need to learn the right strategy, the right process, how to make it repeatable, and then focus on scaling it up over time. So in this video, I'm going to share the full strategy and process of starting trading with $100 or less so that it's simple, repeatable, and can be done with just 1 hour of work per day. The goal by the end of this video is to show you how to start trading with only $100 and be able to focus on this in a systematic way so that you can scale it up and actually start making money. I'm going to show you exactly how we're going to do this. But first, I'm going to cover how to actually get access to capital when you only have $100. Then we're going to go into step number 2, which is the simple, repeatable trading strategy, the exact framework of what I do every single day. Then step 3, the math behind how this adds up to serious income. And then step 4, how to actually make this consistent and scalable long term. The goal is to keep this simple and repeatable. I cannot emphasize this enough. If you start jumping around or doing too many crazy things in the beginning, it's going to be too hard for you to even get to that point at all. So we're going to start there. Let's get into it. The first step is figuring out how you can actually make $100 count in the market. If you go to the stock market and you want to risk $100 on a trade to make $300, you might need $30,000 to $40,000 in capital just to buy enough shares to make that math work. That's why most people think that trading requires a massive bankroll. For example, if you are trading with $100, you have to make 10% in order to make $10 if you are using a broker. But there is a way around this. Leverage and prop firms. Let's talk about prop firms because this is the absolute best way to start trading if you only have $100. Basically what prop firms are, companies like Apex or TopStep, these companies allow you to use a $50,000 or $100,000 funded account with demo money, and I'll explain exactly why it's demo money in a second. You pay a small evaluation fee, usually around $30 to $50 during a sale. Apex is running sales all the time. If you guys want to get a huge discount on your Apex funded account, you can use the code RP1. So instead of you putting $100 into a personal account and trying to grow it to $10,000, which takes forever and usually results in blown accounts, you take that $100, you buy 2 or 3 $50,000 accounts, and you use a proven strategy to pass them. So instead of trading with $100, you're now trading with $50,000 or $100,000 of institutional capital, and your total risk was just the evaluation fees. If you fail, you're not liable for the capital, you just lose that $30 fee. So for example, if you pay a one-time fee and the firm gives you a $5,000 funded account and you make 10% on this account, you make $500 with the same exact investment as if you were to try to trade on your own account. This keeps the upfront capital requirement very, very small in order to try to scale once you know your system and strategy actually works. Now here's the thing that most people miss about funded accounts. You're not trading a $50,000 balance. You are trading the drawdown. Most prop firms give you somewhere between $2,000 to $3,000 of trailing drawdown on a $50,000 funded account. That is your actual working capital. That is what you have to protect. Once you understand that, the entire game changes because now you realize you don't need to make $5,000 on a $50,000 account. You need to make $3,000 before losing $2,500. That's a very different mental model, and that is way more achievable than most people think. So now that we know how to get the capital, we need the strategy. This is step number 2. I use this framework almost every single day, and the goal is, once again, keep it repeatable and simple, keep the losses small, and let the winners run. First, I'm going to show you the model, and then I'm going to go over real applications on the charts. The foundation of this entire strategy is institutional liquidity. We are trading based on institutional liquidity. We are not using moving averages, we are not using RSI, we are not guessing. We are looking for where the big money is trapped, and we are trading the reaction at these levels. Think about it like this. Imagine you're Goldman Sachs and you need to fill $1 billion order. You can't just click buy and get filled at one price. You need massive liquidity on the other side of your trades. Where does that liquidity come from? It comes from retail trader stop losses. It comes from breakout traders entering positions. It comes from people getting trapped on the wrong side of the move. So what do the institutions do? They engineer moves to specific price levels where they know the liquidity is sitting. They push price into these zones, collect the liquidity, and then move the market in their actual intended direction. Our job is simple. Identify where the liquidity is sitting, wait for price to reach these levels, trade the reaction. That's it. That's the entire game. There are only 2 types of levels that we care about. The first level that I like to look at every single morning is the first 15-minute candle from 8 to 8:15 a.m. Eastern Standard Time on the 15-minute time frame. Why the 8 a.m. candle? 3 reasons. First, this is where all the volume starts pouring in. Second, the high and low of this candle become the most important reference points throughout the entire trading day because every breakout trader is watching them. Third, the midline of this candle acts as a magnet, Price will either come back to it after a breakout, giving us our entry, or it will not. You can see right here that the midline acts as a very strong level and price rejected off of it multiple times. Why are we marking out untested session levels? This is critical. Once a level is touched, the liquidity is gone, the stops have already been triggered, the trap traders have already exited. We only want fresh, untested levels where the stops are still sitting. If a level from the Asia session has already been touched during London, we delete it and we move on. We only trade levels that have not been tested yet. The further back a level is, meaning the longer it has remained untested, the stronger it typically is, because more orders have accumulated at that price over time. Asia session runs from 7 p.m. to 4 a.m. Eastern Standard Time. London session runs from 3 a.m. to noon Eastern Standard Time. New York session starts at 8 a.m. and ends at 5 p.m. We are only trading between 9:30 a.m. and 11:30 a.m. Eastern Standard Time. Why? Because that's when the New York session opens, and that is when the highest volume of the day floods in. That's when institutions are placing their orders. That's when the moves happen. Trading outside of this window means less volume, less predictability, more chop, and more chaos. We don't need to be at the charts all day. We need to be there for the 1 hour that matters. The only other level that I will look at is an untested session high or low off of one of these sessions. For example, right here we have a London low, which has now been tested. The only reason I'm leaving it up is to show you just how powerful the reactions were off of this level, right? We had a bounce right here, then we had another bounce, and now this next untested level would be right here. I'm also looking at untested session highs. We're currently creating all-time highs on ES, so this is literally the only high that we have besides these two that we literally just created. So that is what we're going to mark out. I like to mark out my highs using black and my lows using blue. The reason I do this is simple. When I am looking at a low, I am looking to see price bounce, right? That's the reaction I am expecting. Bounce is when price is moving up, meaning I am looking to buy, so I like to color code it with my blue candles, which are my buying candles. And then I also like to do the same thing for my highs, because with my highs, I'm looking for shorts off of a rejection, and I like to color code it with my black candles, which are my selling candles. If you guys want to copy my trading view settings, all you have to do is double click anywhere on your chart, and then you can go ahead and go to symbol. You can create it like this. I'll leave it up for a second so you guys can screenshot. That's all my colors. I recommend, if you guys are trading my strategy, to probably use the same colors as me, just to kind of keep it simple in your mind. Now I'm gonna go ahead and show you guys some trade examples from actual trades that I took, and I'm going to walk through exactly how to enter and exit these setups. So right here, this is our break and retest setup that we talked about at the beginning. The first thing we do is we mark out the first 15-minute candle at 8 a.m. Eastern Standard Time, and then we wait until 9:30, because 9:30 is when the stock market opens, meaning this is when ES is gonna get more active. A lot of people don't even think about these things, guys. ES is the S&P 500, right? It's a futures contract made up of 500 stocks. So why on earth would we be trading a bucket of stocks before the stock market opens? So that's why I like to wait until 9:30. You can see that we have this big candle, big momentum. I then like to go down to the 5-minute time frame, and I like to wait for a retest, right? So we got the break. We are now looking for a retest and then a continuation in the same direction. So the break and retest move is very simple. If you're taking longs, it's up, down, and then back up. If you're taking shorts, it's down, up, and then back up. I just kind of like to draw this little visual to give you guys an example. So let's go ahead and see if we can get filled. Boom, right? So we are in that trade. And the one thing I want you guys to pay attention to is really just how much respect we showed to this midpoint, right? It was almost like a bouncy ball hitting the floor. We immediately started coming up off of it, then we retested it again, showing even more respect. So I was very, very confident that this trade was gonna play out. So I'm in this trade right here, and boom, right? Ended up playing out beautifully. Off of that specific trade, I did make around $14,000. I risked pretty heavily when I saw that this midpoint was being respected. The key thing with all these setups is that you are dropping down to the 1 minute and the 5-minute time frame to observe exactly how price is interacting with these levels. A lot of people get messed up because they will just immediately long the second price touches this midpoint without waiting for any confirmation. I like to have my stop loss at around 5 points with this setup, and I like to target 15 to 20 points with a risk to reward of 1 to 3. All right, everyone, now we are on example number 2. We have marked out the first 15-minute candle from 8 to 8:15 a.m. Eastern Standard Time, right there, just like that. Now we are waiting for a break. We can clearly see that price is breaking out to the downside, meaning we are looking for some shorts if we can get a clean rejection off of this midpoint, just like that. So the exact thing that I want to see happen in this moment, and the exact thing that you want to see happen before you take the trade, is that price is failing to close above this midpoint, right? So let's see if we can get that. I like to go in the 1 minute to see exactly what's going on. Coming up, coming up, coming up. All right, good signs. We're tapping it without closing above it. All right, we had a few 1 minute candle closures above it, which isn't a complete deal breaker because the main thing we're looking for is a 5 minute candle closure under this level. Boom, just got it. We're in shorts. There we go, right? I ended up making around $12,000. I did miss this move. I didn't realize that we were gonna come take out this low, but I stuck to my rules, so that's all that matters. All right, everyone, example number 3. We're looking for some shorts to the downside. Let's see what happens. Looking good so far. We're still in this trade. Boom, we got stopped out, right? So on that trade, I did take a small loss. That's part of the game. There's honestly nothing I really could have done here. It looked really good, just didn't play out, right? That's part of the game. We have to be okay with that. Now I'm gonna show you guys how I like to trade rejections. So right here, we have an untested London high. So pretty much all I'm looking for is for price to come up, sweep this high, and then move back down. So right here, we are just looking for price to tap this level, but fail to close over it on the 5 minute time frame. So let's see if we can get that. Boom, tapped, failed to close over. We're in this trade, we're already in profit, about to hit take profit. Now with the bounce and rejection setups, I like to set my stop loss at 10 points and my take profit at 30 points. The reason I do this is simple. When I am trading a bounce or a rejection, I am targeting more points because we are trading either the bottom of the range or the top of the range. So we can expect a big reversal. We can expect price to move 30 points, just like it did right here. And boom, off of that specific trade, I made $15,000. That was a beautiful trade for me. All right, everyone, we have another example. We are looking for some longs off of this low. We're gonna set our take profit for 30 points, and we're gonna have our stop at 10, just like that, giving us a nice, clean 1-to-3 risk to reward ratio, like so. Let's see if we can get some respect on the lower time frames. Boom, right? That's exactly what we wanna see. I know that played out super fast, but even on the 1 minute, this looked amazing, right? So if it looks great on the 1 minute, chances are it's also gonna look great on the 5 and on the 15. I like to use the 5 and the 15 for confidence, but if it looks good on the 1, that gives me even more confidence like it had today. So let's see if this trade plays out. Boom, right? Off of that trade, I made around $11,000. The great thing here is that my strategy has a win rate of around 60%, and we're targeting a 1-to-3 risk to reward ratio. So as you saw, even if we lose trades every now and then, it literally does not matter because our winners are 3 times, sometimes even 5 times as big as our losers. So let's talk about how this actually adds up to serious income when you're starting with $100. You take your $100 during a prop firm sale, which happened pretty much every month. You buy 3 $50,000 eval accounts at $30 each. That's $90 invested. You have 10 bucks left over to go put in your pocket. Now you apply the strategy. You're trading the 9 to 11:30 window. You're looking for 1 or 2 setups per day. You're targeting a 1-to-3 risk to reward ratio. On a $50,000 account, you can comfortably trade 2 to 3 contracts at $12.50 point per contract on NQ, which means you're risking about $75 to $100 per trade to make $225 to $375 per trade. If you hit your profit target of 3 grand on the eval with a $300 average per winning trade, that's about 10 winning trades. You could pass the eval in under 2 weeks. Some of our members pass in 3 to 5 days when the setups are super clean. Now you're funded. You're trading a $50,000 account. Every dollar that you make, you keep 90% of, or 80% depending on the firm. Let's say that you average 500 bucks per day in profit. That's $2,500 per week. That's 10 grand per month from one account. Now scale that. What if you have 3 funded accounts running simultaneously? That's 30 grand per month. What if you have 5? That's 50 grand per month. And your total investment to get there was $100 in eval fees. That is the power of combining a simple, high probability strategy with prop firm capital. You don't need 50 grand of your own money, you need $100 and a system that actually works. So if the strategy is this simple and the capital is this cheap, why isn't everybody making $30,000 a month? Because of one thing, consistency. The strategy works, the math works, but humans fail. Humans fail because humans are biologically wired to not be traders. The human execution fails for 3 specific reasons. The first reason, emotional interference. When you are trading a practice account, it's easy to follow the rules. But when you pass that eval and you're suddenly trading with 50 grand of real money, the psychology changes. You take 1 loss and instead of walking away, you revenge trade. You see a setup forming at 11 a.m. outside of our trading window, and you take it anyway because you're trying to make back what you lost. You hesitate on a perfect break and retest because you're scared of losing your funded status. The second reason is simple. Time and presence. You have to be at the charts every single day at 9:30 a.m. Eastern Standard Time. If you have a meeting, if you miss the setup, if your kid is sick, you can't trade. And the setups don't wait for you. The market doesn't care about your schedule, doesn't care about your life. The third reason is that scaling is almost psychologically impossible. Running one funded account manually is stressful enough. Running 3 simultaneously, 5, 10, the mental load of managing a bunch of positions with real money is something that most people have never experienced. And it's something that breaks even experienced traders. Your execution quality degrades as you add more and more accounts because your attention gets divided. The strategy works perfectly. The human execution is what fails. I spent years dealing with this exact problem. I had the strategy, I had the funded accounts, but my own emotions were preventing me from scaling. I couldn't run 5 funded accounts at once manually. It was too much stress. I was profitable, but I was capped. And that's when I realized the true key to consistency isn't discipline, it isn't mindset, it isn't journaling. The true key to consistency is removing human execution from the execution process entirely. That is why we took this exact strategy, the 8 a.m. opening range, the untested session levels, the 1 to 3 risk to reward, and we hard-coded it into an algorithm. We built 2 systems, VoodooBot and QuantBot. VoodooBot is our long-term wealth builder. 5 years of back-tested data showing consistent compounding returns. It trades this exact strategy with zero motion. Doesn't hesitate, it doesn't revenge trade, it doesn't take a trade outside the window because it's bored. It just executes the math day by day, month after month. QuantBot is specifically engineered to go on extended win streaks. It's aggressive, it's precise, and it passes funded account evaluations in under a week on average. Remember those 3 50K evals we were talking about, buying with your $100? QuantBot is what passes them while you're at work, while you're sleeping, while you're living your life. When you remove the human from the equation, everything changes. You can scale infinitely. You can have the algorithm running on 10, 15, 20 different funded accounts simultaneously, all executing the exact same strategy with the exact same precision, with no emotion, no fatigue, and no missed setups. So that is how you take your $100, buy a few evals, pass them with an algorithm, and scale to $1,000 a day and beyond. Not by clicking buttons manually and hoping your psychology holds up, but by managing a system that executes perfectly every single time. And the results speak for themselves. We have people who started with less than $200 in evaluation fees and are now pulling multiple payouts per month from funded accounts they never would have passed manually. Not because they got lucky, but because they plugged into a system with a real proven edge and let its math play out without human interference. Now, I wanted to provide this full model to you guys on YouTube to be able to get started with the infrastructure. You can take the strategy to get to the charts tomorrow at 9:30 a.m. and start practicing it manually. Everything I showed you today is real. It works and you can apply it immediately. But if you want to see these algorithms working for yourself, not just take my word for it, but actually verify the results in your own account, we're doing something that nobody else in this space is willing to do. We are offering a free trial of our algorithms. I am so confident in these algorithms that I'm going to let you plug them into your own account and watch them trade for an entire week, completely free. I don't need your credit card, no commitment, just results. You'll see the trades being taken, you'll see the risk being managed, you'll see the profits being generated, all in your own account with your own eyes. And then you can decide for yourself whether this is something you actually want to continue with. The link to get access to the free trial is right down in the description. Click that link, get set up in about 5 minutes, and let the algorithms prove themselves to you. Because at the end of the day, I don't need to convince you with words. I would rather just show you. If you like this video, please hit the like button, subscribe, and I'll see you guys in the next one. Thank you.